I was hoping that the Mattel earnings were going to say that the toy demand is good, helping the entire industry. Basically, what I wanted is that all the toy companies are good. Maybe we were too negative on all of them. Meanwhile, JAKK is priced like death. Analysts on Mattel had basically flat revenue growth. And on JAKK, at least the two analysts on there, I don't think that the people that own this are thinking about anything like this, but they said that it was going to be down 40% on revenue this Q3 versus last Q3. So think about the bar difference. Mattel misses by 100 million, so it's actually down 7% when it was supposed to just be like in a range. JAKK just needs to be better than the extremely low bar. I don't think 40% is the true bar. I think if they're actually down 40%, people are like, wait a minute. But if instead of 221 million, it comes in at like 255, the story is completely intact. I think it does change the timeline. Like, I'm not as confident in November and December as I was. Actually, Q3 earnings for JAKK completely changed the narrative. But before those earnings call, I'm not so sure it's going to trade amazingly. I'm not moving a thing. If the IV goes down, I'm going to buy more April calls. That way, you have plenty of time for this thesis to play out. Additionally, like, what do you think a trade deal is going to do, right? So Trump may or may not meet with G. Like, it's, like, people have like whiplash and like a little bit of fatigue. I think it's eventually going to happen. So that's my short thoughts. I was flying yesterday. I got in extremely late, so I apologize to the Substack people that I wasn't able to really like write anything coherent. I tried, but I think a video is better. Oh, and I forgot to say this. Barbie sales were down for Mattel. So I think that they were overly cautious on the market to kind of give themselves credit for the fact that Barbie was down 17%. But to me, that's completely explainable because the Barbie movie came out in 2023. 2024 is like, a boom for Barbie. Like, of course it's down 17%. I don't think that is an indication of how the broader toy market is doing. It's just been a couple of years since the movie. And someone asked me, like, Disney Labubu's, like, is that your core thesis on JAKK? Like, no, they have a bunch of toys, but I do specifically think if I'm looking at their catalog, the Disney princesses are probably number one this Christmas season, as well as those plush toys from Disney, because plush toys are hot this year. And again, everyone's talking about how this is going to affect margins. In reality, look at Mattel. They're down less than 1% on margins. They have great margins to begin with because they mark up their toys because it's Barbie. JAKK sells at a much cheaper price point. So even if they have more manufacturing in China, everyone is manufacturing in China. There's still, if you have some in the Vietnam, that's still tariffed. But because the COGS is lower, like passing it off to the consumer is not as bad. I still strongly think that's going to be told in Q3. I still think management is going to sound way more upbeat. And remember, what they were so cautious about and what Mattel confirmed is that it's not so much about consumer brand. In fact, they didn't mention that once on the call. They said that the retailers are hesitant. So whether they're going to order in Q3, which for both companies ends in September, or Q4, which starts in October, is the question. I would like to remind you now what happened in October. The Trump tariff fears on China picked up drastically. When is the due date for that? November 1. So I am certain, I'm actually certain, I usually like to hedge myself, that retailers are rushing to get in products before November 1 because they don't want no toys to sell for Christmas. For a lot of these retailers, it is not so much about making money on the toys, but people during Christmas time come to the store to buy, $25, $50, $10, $20 toy, and they end up buying $300 more of stuff. So they will eat a charge. They do not need a profit maximize on the toy. Just like Dollar General will lose money on some things, like literally lose money, not like take a smaller margin, because they want you to buy the things that they have better margins on. Target is a great example of that. They're not looking to make a boat ton of money on toys. But while you're there, you may as well get other things. So they are going to stay stocked. As we've seen, they are already completely stocked with toys.